Hello, everyone, and welcome to today's webinar. My name is David Easthope, Head of FinTech in the Market Structure and Technology Group at Coalition Greenwich. Very excited to be with you today, and our webinar is on emerging technologies and how they unlock the full potential of market data. I'm very fortunate today because I'm joined by an experienced panel from SIX, with whom we collaborated on our second annual market data study, and from which we will reveal some of the key insights and implications for market data delivery and consumption. So if you haven't read that paper, please reach out or otherwise go to the SIX landing page where you can find a copy of that paper for your reading pleasure. And one thing that's really beneficial is we are fortunate to have multiple facets of market data covered today, with a particular spotlight on my favorite topic, technology, as well as some of the future-oriented perspectives. So I'd like to introduce today's panelists. First is Matthew Nurse. Matthew is Commercial Product Director at SIX. Then we have Hank Doger. Hank is Head of Product Development at SIX. Welcome, Hank. And Jennifer Chang, Head of Innovation Hub at SIX. And we're very fortunate to have Matthew and Jennifer there together on screen. So welcome, everyone. And I think really it's best just to get right into it. So Matt, what really stood out to you in this year's study?
Thanks, David. Yeah, it's a good exercise to do these things in repeat. And obviously, this being the second iteration of the report enabled us to validate things that came up last year, but also explore some new concepts. So essentially, the market thinks the same in terms of what they want from data, where quality trumps cost. The quality is different things in terms of accuracy, coverage, feed availability. And between the years, as you'll notice from the slide that's just come up, pretty similar findings from the year before. Last year, we really emphasized the fact that, there's a lot of discussion in the market about the actual cost of data, but it's more important to know exactly what you're buying and the quality of what you're buying before you actually then pay for it. In terms of things that really popped up that were slightly different, we looked again in the real-time space. There's a real acceleration of people and institutions moving many processes to be intraday and real time. It used to be the sole domain of the trading area. Now you see risk, compliance, digital applications, websites, a huge array of things now, just like our lives, are in real time. And SIX sees a big uptick in that and demand for that here. I think, again, as regulation continues to be a factor in the market, people still need data to prove out things to regulators. And we asked quite a few questions around tick data. Tick data is used by the majority of the respondees. Often people need more than just a single source. And there's a mix between people taking it direct and people using it through third-party applications for things like market abuse, transaction cost analysis, and arrival price. I think the final thing, which is very interesting, is the overlay between the data and technology. So historically, really, you just took a feed, took a file, took the data, thanks very much. Now, people are making conscious choices about what particular delivery mechanisms they use. This has a deep impact on cost and timeliness of data. And the key thing which we came to at the end of this report, which, funnily enough, we didn't even include last year, was the headline item around advanced technologies, AI, very interesting responses to how people think these use cases are actually changing their business, whether they're worth it, and how they actually manage the data. So a real mix between validating the past, but also searching in new areas for different answers.
Absolutely right, Matt. I think it's really interesting to see the consistency here in terms of what drives decision making. And as you mentioned on the technology side, I think that speaks to how fast and strong the technology has come into this sector, that from year to year, some of the questions change or things we want to discuss change. And speaking of technology, Hank, I think that it's often said that market data and technology are clearly interrelated. And so from your perspective, Hank, how have technologies such as cloud or APIs caused you to rethink the way that you deliver data?
Yes, a great question, and I think there's some statistics there that are very compelling. I think it's not a surprise to see our customers' belief in automation and thinking about APIs to make things, better, fast, and easier. But the stats are extremely convincing, right? 70% of the participants of the survey actually stated that they can see API become the preferred mechanism to use market data. And that's not a surprise. I think the technologies we have at our discretion today versus those of, let's say, a decade ago are so different. And we can see the real benefits of customers willing to jump and embrace these new technologies. At the end of the day, it's all about, customers wishing to integrate the content they need, right, as fast as possible. There's this return of investment question there that's very important, and also how much effort you then have to spend to maintain that interface. And we see that with APIs. Customers are being given the keys. They are in control of what they do, how they pull in the data, and what they do with the data once it's in the building, so to speak. And this is really where I think, APIs come in. And now, I guess there's new technologies, but at the same time, it's also very important to recognize different use case. You can't just say, I want an API. It's what are you going to use it for? And at Six, this is something we've been thinking about quite long. And there's two particular use cases we've identified that are very kind of common, but quite different. One use case is the one where, you want to display market data on some type of a display tool. And it's all about creating that user experience who wants to collect multiple pieces of content and actually make, a quick decision on the back of the intelligence they can extract from that content. And what one user does versus another or versus another point in time may be very different. So these request response APIs are fundamentally differently built than, for example, an API that can serve up large amounts of static data to, for example, initialize and keep a database, a security master, current. And with that in mind, we actually have developed two APIs at Six to support those use cases. One we've launched last year, it's called the Web API, and it's lending itself very well to create that user experience on the display tool. The other one, the bulk API, is newer. We're about to launch it in the last quarter of the year. Is really built to initialize and feed databases. But they essentially allow the customer to do the same thing, to take control and to make that whole process very much automated as opposed to manual. And that's really where I think our power comes in. And I can back this up with some real meaningful, I think, anecdotes and statistics. Our older legacy, API on the Six side supporting display use case was XML based. Our new one is JSON GraphQL based. And we can see customers developing a brand new application in a matter of weeks where it would have taken them months. Now, developers aren't cheap. If you have a couple of developers building your application and can you save yourself literally a couple of months in development time, that is a big saving to make. And similar to the bulk API, it effectively allows you to do what a file delivery system would do. But we've seen examples and we've tested this where you can initialize a database, let's say for 10 million instruments, hundreds of data points, in a matter of minutes, whereas you would normally have to wait for hours doing this in an SFTP file delivery mode because you're no longer in control and you have to wait for things to happen. You haven't really got the keys to ingesting that data the way you want. There's a final comment to make, and I think it's an important one. Even though you have the right technology, that doesn't necessarily mean kind of like it's going to go well, right? And I think data vendors have to be conscious of how they want to present the data to the customer, make it intuitive, easy to understand. And that's why we are quite focused on building out a simplified dictionary, if you will, a data model that makes sense to the most average user out there, right? You can read the data as is. There's no lookups or enumerations to be concerned about. The data speaks effectively for itself, but again, most developers aren't necessarily deep data experts, and making it easier again will speed up the process for them to develop their applications. The final thing, I guess, which is important in creating that great experience for the customers is not just the technology and the data model to go with it, is how customers can self-service their needs to get up and running, right? They don't want to go through a thick manual that may be outdated to figure out what the data means and how to use it. An API portal with a Swagger interface and online data dictionary. That's really where we see clients get really excited about embracing these technologies and making them very, very much work for them the way they are designed to deliver speed and efficiency.
Yeah. No, Hank, thanks for that summary. I think that, as you mentioned, API has been around a long time, and what's changed is how people are using them, and then the benefits. You mentioned speed to market, which is a key one there. That being said, there are other emerging technologies such as AI and machine learning that haven't been around as long. And so I want to bring Jenny in on this conversation. So Jenny, from your perspective, what role do emerging technologies like AI and machine learning have on market data, including our favorite topic, trading and investing strategies? And what's the role in SIX in supporting these developments?
Okay, thank you, David. So I think you mentioned earlier that market data and technology is really goes hand in hand, or it's interrelated. And that's true, because in market data, we have some key concerns that we need to look at, and that is speed, it's timeliness, and wherever we need insights actually that sets us apart from maybe the competitors, then this is areas where data can help, where AI, for example, could help. And now I do have to chuckle a little bit when it comes to sort of emerging technologies, because a lot of these technologies, if we talk about API, cloud, AI, they have been around for a while also in the market data space. Algorithmic trading is not new, right? If we look at sentiment analysis, or if we use data for analytics or predictions, they have been around. I guess what's really interesting now, and as Matt said earlier, in the last survey, we didn't include emerging technologies or AI. But now, of course, this is quite an important topic, and this really is what our respondents are telling us as well. So 75% of our respondents clearly say that AI, machine learning, or AI, including generative AI, is the most important technology to keep an eye on, because it will have an impact on market data. And that is not too surprising in a way if we look at what happened, obviously, in 2022, November, when ChatGPT was launched. And we realized that AI is no longer just a quirky technology, maybe for quirky people, or the data scientists need to prove themselves before they get the budget. I think now it's everywhere. We're talking about AI, and especially there is a real push, also a good push as well from management that wants to include AI in their strategies. And this is beyond the hype. So the hype, if we look at the Gartner's hype curve, we have reached the hype, and I think the latest revision in August, we can see that it's going down, and this is a good sign. Going down means that we are moving closer to reality. There's no longer emerging technology as a hype, but we're seeing some real use cases that bring value, maybe also some failures, but it is important to talk about these as well, because we need to share the learnings in this endeavor. So really exciting times. I think what we see here is also what we hear from our customers. So just after the ChatGPT launch in, I would say, Q1, Q2 2023, we picked up the conversations with a few customers just to see where are they on the journey around AI. How do they feel about it? Are they comfortable with this? Is there any help that they need? How do they come to terms with it? And we see that most of the use cases center around, they're very careful around sort of experimenting first, cautiously with internal use cases, because there's a lot at stake. And in the financial industry, there's regulations, but there's a lot to be gained, but well, there are losses as well then if we use new technologies. So a lot of the use cases there were around internals, improving internal efficiencies, maybe knowledge bots. And 1 year down the line, so in July this year, we actually organized an AI event together with our colleagues from SIX Banking Services. And in our conversations with our customers, we hear now there has been a development. So not only do we have our customers experimented and successfully implemented these bots that can gain productivity and efficiency, but they've also moved along now on the roadmap to look at cases that are closer to their value proposition. So, for example, and this also resonates in the survey, that the top use cases that our customers or financial industry is looking at is to improve investment decisions. And that's key, because this is where with insights, we can actually make better decisions and also better strategies. that's certainly a key area to look out for. So this is just the beginning of the survey and of the journey, and I think it's exciting times really ahead of us.
I like thinking of this as going beyond just being quirky, right? Because technologies, while should be fun, but they should have a definitive purpose. And I think you hit on one, which is actually improving investment decision. I think that just shows a little bit about where we are. So I came up in the investment industry. I always think about investment analysts and traders being sort of hybrids, right? They leverage technology, but ultimately the human is making decisions. Although with generative AI, we're getting closer to the machines making really, really interesting recommendations that maybe humans don't see in the data. So
Right.
really great to see that this popped up here, because AI machine learning is a topic that can be full of hype. But in this case, we see actual industry use cases that are happening and should proceed forward here. So very
And I
interesting.
just
Thanks,
noted,
Jenny.
may I just quickly, I just noticed you actually had a second question as well, right? Around what is SIX doing in this area.
Right.
I think just to touch upon that one. So, I mean, for SIX, of course, technology is important, but the center point really is around how can we provide value to our customers? And this could be AI today, but could be other technologies as well. So most important thing is to look at what is the value we generate in conversations with customers. And there are three main areas really that we look at to help our customers. And in one area, we call it these of essential AI. And this is where we do what we do today, but with AI, we can do it better. So these are areas like data coverage, like completeness of the data, quality, accuracy, and so on. Then we have an area where we look, what we call it sort of AI enhancements, AI enrichment. And this is looking at our products and services. How can we enhance it further to help our customers? And here we have actually our first case that we introduced already a few years back. And our data scientists would never talk about AI, by the way. They talk about NLP, about LLM, or whatever model and techniques they need to use to help solve problems. So here we introduced an NLP case for a customer support team. And this, yes, it is an internal efficiency case, but of course it also has knock-on effect and direct impact on our customers. And then finally, we have an area that I would love to call game-changing AI. And that's sort of the area where I think it's the holy grail that everyone looks at. It's how can we create new services due to the new capabilities that we can leverage? How can we, and Henk talked about customer experience, how can we make use of that customer experience, this revolutionize it? And here we have a couple of examples, like in 6ID Chat, which is our display product, 6ID, where we built in an AI feature to really change the entire way how a new generation of customers can interact with our data. No longer having to understand the data structures or our language, but using natural language, maybe even like Japanese or Mandarin, to actually make sense, find the data. And there are a few other cases in trade surveillance. That's CCAM, for example. That's more an area where we go beyond today's value proposition to help our customers in their journey. It's an adjacent area that we tap into to help compliance officers with their trade surveillance activities. So yeah, so a few things that we have that we are launching in our pipeline.
We can't ignore those internal use cases, right? Those internal efficiency, compliance, risk. It's not just all about trading and investing, for sure. And Matt, Jenny really hit on, offering services to clients using technology to build services, whether that be display, terminal. From your perspective, based on this research and where you sit, what other services do you think differentiate market data providers out there today?
Yeah, it's a good question. I mean, from all the customers that I speak to, I think we're in a moment where a lot of people have enough data. They just want to make best use of it. And making best use of it, you really have to understand what quality and what content you need to serve the right use case. And, historically, the business used to demand various parts of the data chain to do different jobs or satisfy certain ideas. And I think what you see in the market is financial institutions that are really starting to understand the data through more sophisticated data functions within these businesses are really actually getting both the best value for the data they take but also getting the best out of that data. And of course, talking of any of the technologies, in this space, the foundation level is the quality of the data that goes into it. Now, this is why I said at the beginning, data is a nuanced thing. You don't need the highest quality data in every use case. If you think about the different client segments to start off with, you wouldn't service your retail part of the business with a similar level of quality to your institutional algorithmic side. And the beautiful thing about data provision now is not only can you pick exactly what you want, you can pick the quality and the timeliness that you need and get it delivered with and where the new technologies will allow you. So it means that, there's multi-layers now as to how you need to effectively manage a financial institution with data. And, if you look to see exactly what people expect to be paying, which was another question in this study, the majority still say they'll be paying more, but not masses more. And I think what that means to me is that there are evolving commercial models within the industry, whether it be licensing, delivery, or the cost of transport and storage, which make people think that it is going to be, or it's going to cost more in future. But interestingly, I think that a lot more businesses are now taking stock of the data they've got. Whereas, let's say 5, 10 years ago, you heard a huge amount about alternative data sets and everyone was basically searching for the data that nobody else had. Whereas I think there's a huge area now with technology coming in. If you take insights as a good example, we have a lot of buy-side customers. Historically, you used to have to rifle through huge amounts of data and rely on the end user to make a decision about what they told their client. You see a lot of firms and you see a lot of technologies now looking to consolidate information and give people the best bits and help people highlight the right things. And I think this is where this kind of new technology is hugely complementary to market data. So it's exciting because I think there's a lot of use cases for data coming out beyond the bog standard send me a file of data.
Absolutely. And you already hit on, there are multiple types of data, including real time and others that may not be appropriate for every use case. You definitely hit on the cost theme because the research does show that people do expect to spend more in the coming years, which is consistent with last year. And I think one of the things that really stood out as well in terms of this research, Hank, was the role of real time as well as historical tick data. I'm going to turn it over to you to explain why you think real time data really showed up this year in the study from your perspective.
Absolutely. And I think, David, you got some statistics there to back this up as well, right? I think, nice to see, by the way, right? How half of the participants in the survey actually suggest they're using real-time market data throughout the day, so not just occasionally, which is quite a step forward from before. And then what this particular slide suggests as well is that the use of real-time data has definitely gone way beyond the traditional trade execution part of the chain, trade operations, risk and compliance, but also end user display scenarios. I think it's not surprising that we also see, in line with an increased use of streaming data, that there's an increase in historical tick data consumption as well. A statistic that even surprised me, because I think most participants suggested they were using tick history data in some capacity, far beyond the people expressed kind of no interest in actually using tick history data. That's a very compelling statistic. And I think it all goes hand in hand with this, wider use cases where real-time data is being used, but also I think to a certain extent, the fact that real-time market data has been democratized, I think, which is a great thing. The most, I think, average, even non-professional user probably has some mobile app to look at their investments, or even uses the internet to see actually what's happening out there in near real time. And it goes back to what Matt mentioned. I think in the past, it wasn't really simple to use real-time market data and make that cost effective for example, display non-professional use cases. The technology wasn't lending itself very well to do that. Now, to Matt's point, right, your technology can allow you to take delayed data, take a snapshot, or even conflate data if the user doesn't want to see multiple ticks kind of like per second, because frankly, he can't even read it with the human eye anyway. And these APIs can do this. The web API I mentioned earlier allows you actually to set the conflation rate to exactly that rate your application, your end user prefers. And all that makes, managing market data and real-time data in particular far more cost effective than before. On the tech history side, by the way, I know we haven't spoken much about cloud, but it's still very much there. I think there's a bit of a wake-up call about what cloud can do, right? It's not, necessarily cheap. So be, clever about where you want to use cloud technology, but definitely has made storage of data cheaper and far more accessible than before. And tick history data is extremely voluminous, so you need to store data. And I think Matt mentioned it at the start as well. Some customers are savvy enough, big enough to ingest the real-time stream and build a tick history proposition internally themselves. Others will look at a vendor who can give them a ready-made service, pre-normalized, that can serve up tick history data pretty much on demand. And because of the needs in the marketplace for tick data at SIX as well, we're actually going to launch a refreshed tick history service called Ticks by SIX to do exactly that, to offer a very kind of easy way for customers to consume market data and historical data to do all the analytics that goes with the consumption of streaming data. A last point to make perhaps is that, going back to a point I was making earlier, things have become easier, right, with technology. And I think at SIX, we really believe in this. And I guess Jenny mentioned this as well. We want, basically data to be democratized, so the average user can make better investment decisions, if you will. And with the web API, that's really where we're going. And we can see that it gets great appeal, right? Customers are really saying, listen, this is actually quite a good piece of technology. My development cycle has become really pretty much a breeze. And for us to see these applications, being launched by our customers that benefits the ultimate end user, that's fantastic to see. And to that effect, to even make that more, I think, straightforward, we've even built a fictitious application called Regalia Wealth, and on the API portal where you can find documentation and information about the web API, you can actually find that fictitious application that's working. It's a portfolio app. But we've built that app to actually demonstrate to the average user and the prospect and the customer we're trying to reach out to demonstrate how easy it is to pull a compelling visual representation of market data together. And we explain how the API in the background calls up the data, right? And how the queries is being built and what data is being returned to show exactly how easy it is. And I think that's really where we can help our customers to allow them to consider these newer technologies, the conversation we had at the start of this conversation, and actually prove the point that it doesn't have to be difficult or costly to build actually good applications if you're embracing the right technology and you're using data only to the extent you need it, right? No longer the floodgates, to Matt's point at the beginning, where you just have to eat all the data that the vendor can throw at you, and the effort is on you to make it all kind of work. No, these APIs can give you exactly what you need when you need it, and actually it doesn't have to be that hard at all. And so that's basically what we're thinking when we say making a difference with market data, and that's kind of like really what drives us at SIX.
Yeah,
I'd say to Hank's point that knowledge used to be the big barrier between the customer and a financial institution, and you'd have to go to them, and they would retain all that knowledge. Now data is making that knowledge much freer. And that means that both sides have to get much better at understanding the data. So that application Hank was talking about, you'd never go and speak to the head of a private bank typically about an API. He'd want to talk about the business, how to bring more clients on. The application shows the API in such a simple way that you can actually explain, look, if that technology is that simple to look at, you've got it. And I think that is where, the data and the technology, that interlapping is coming and driving towards the customer, but also into new areas in the bank as well, or into an asset manager. And I think that, a lot of people within, think about how many people play with the ChatGPTs on their phone now. this used to be the domain of developers. Now you've got everyone playing with it and realizing there's super simple things you can do. And I think in our space for institutional markets, showing our data simply and how easy it is to deliver is meaning that people can really get onto use cases much, much quicker than historically they used to.
Exactly.
Absolutely. I think what stood out to me just looking back at these use cases for real time was also the emphasis on risk and compliance, which has largely been an end of day, intraday environment and has really shifted over the last few years. And I think it's incumbent upon data providers to make real time available and also to keep it cost effective. And I think that's part of what the technology can do and deliver, is to keep it cost effective as well for these expanding use cases. And Matt, you hit on Chat GPT on the phone. That happened to me just the other day. People are asking it questions. It's really become a big part of our daily lives. And I think we should come back to Jenny to say, looking at the future, right? So kind of casting your vision out over the next few years. Let's get kind of specific and maybe even risky and say, what will the future look like for emerging technologies like generative AI, and how will they get a sort of firmer grip on the market data industry in some of the ways that it's gotten a firmer grip on our personal lives, and what is the role of humans in that decision-making process?
So I think technology or AI having a firm grip on market data sounds rather restrictive, and I think it's really the opposite. So if we as human beings use the technology well, so answering a few of your questions already about humans and technology, then it will propel us. I think it can be that leap that we need to move forward rather than restrictions. Now, for sure, AI is here to stay. And what I said earlier is that we are beyond the hype, which makes it really interesting, because now we can talk about not just overraters of high expectations, but we can now talk about successes, as well as we can talk about where it didn't work, where we probably need alternatives in different areas. And so I think the question of where will this lead us in the future is also for me a question of where do we have obstacles today? Because these are the ones that stops us from making the most of that technology. So this is why I think looking at the risks is fantastic. And what we see here is that there's a potential for erroneous data. So there is still fear that maybe with AI, applying AI, the outcome is not good enough. I think we can have wrong data as an outcome of wrong. So that obviously is an issue in an area where and very risky. Then second line, implementation costs. So yes, so I think if you have experimented already, successfully delivered your first proof of concept, and you really want to make things scale with AI, there is quite an investment to be made. And if we talk about generative AI, how much calculation power you need, and etc., etc., there is a lot that we need to look at in terms of costs, and we also see developments here as well, though. So in different areas of concerns, also information leakage, is it now the cloud, or do we need to do something on premise? In all of these areas of risk, we can see development already taking place today, and that is promising. And we also see competition, which is healthy. So it's not just the few providers, but we also see more and more variety of techniques as well. New research being done, but actually research meeting reality now with real use cases, useful use cases. So that's exciting times. I would say we need to keep our eyes on three areas if we look at the future. One is the technology, obviously, along these areas. So how do we use it? How can we have developed technologies that are more efficient, cost efficient as well? Do we have models that are not the general purpose models, but we already see a trend towards more specialized models, also efficient models, and there's more, I think, that will come. Then the second item is around skills. Now, it's not mentioned here, but I think it's not just the technology. You need to have the people in place who understand what you can do with AI. And that may be if you want to build something yourself in-house, because it's so strategically important that you need to own this. Or even if you partner with someone, or you want to go into collaboration with someone else to kind of buy technology, then you also need to have the skills, because there's so much out there. You need to have certain skills to make that due diligence for you. So skills is going to be something that I think everyone of us needs to look at. And finally, data. So we heard already, well, maybe not, depending on your use cases, you need to intelligently choose what kind of data you need that makes sense. And that requires the right data, it requires knowledge about selecting the right data. And this is where we as data vendors obviously can support and need to support our customers. And I did say 3, right? I think there's a half one, which is responsibility as well. So I don't see it anywhere, I think, in the industry where people irresponsibly release anything on the market around AI. And I think we wouldn't do that too. Of course, now we have topics like the EU AI Act, where we are also very much in that field, ensuring that our customers can still rely on our data and on our services with AI. And this is something that we all need to look at as well. So so many topics, a lot more to come, and I would definitely say watch the space, because it's going to be very exciting.
Perhaps to add to this as well, I think, and be brave enough to experiment, right, Jenny? I think ask your data vendor to get access to data sets, for example, you haven't got access to yet, to see if you can do something with it from an AI perspective. I can see this myself as well from how SIX operates, the mindset to experiment and the willingness to fail because you learn from it. And run that POC, right, and take it forward if it works, and pivot if it doesn't. I think that's the only way to get experience in your team, right, in your firm. As we've seen actually with cloud technologies as well, right? It's only when you really embrace it and play around with it, you're going to get comfortable and understand what you can use it for and why not. I think you got to draw your own lessons as opposed to being told from others what to do, so to speak. And I guess we like customers who experiment, right? And some of our technologies, the new ones, in that sense, are very cloud and therefore AI kind of friendly. The data set is very structured, can be very easily navigated by AI. I think that's important too. We can only encourage that, right? We like to co-create from that sense and allow our technology and our data to allow clients to effectively get down that journey and learn from it.
Yeah, I think there are 2 points to add from my perspective. One is just throughout this whole discussion, right? The role of cloud providers like Amazon, like Google, in supporting real-time take history, and also layering on those AI machine learning capabilities are all there to experiment, Hank, with and play around with. I think that's key. And just another point here, while we were seeing the kind of the list of all the things that can go wrong, I think there is a tremendous opportunity here, and that investment decisions and even internal decisions and customer-facing applications can all be improved through the use of generative AI. So we don't want to make it all seem doom and gloom here, but as Jenny, you said, it's important to look at those risks, and particularly even as how you position this internally within your organization, because if your CEO has one bad experience with ChatGPT on their own, they may just throw the whole thing out and say, let's wait another year to experiment. So always good to be careful and balanced on the risks versus opportunities here. So right. I'm going to open it up to a broader set of questions. One of the questions that's come through is around, will you be able to see a copy of this research? Absolutely. So we can certainly, after the event, make sure everyone has information on where to get access to this research report and these findings so they can read them at their discretion. Another question is really around how to reconcile some of the things that we've said or heard here. So I'm going to throw this out to the group, maybe Matt, to you, just in terms of, you mentioned earlier spending, right? So we know that there are expectations around future spending growth. How is that going to sort of impact budgets, and how are people expecting to see their spend improve or change over the coming years around market data?
Yeah, I think that if you are on the client side, you will probably be experiencing a more complex commercial kind of proposition from many of the people in the chain, whether that be those that deliver the licensed source of that data, whether it be an exchange or another source, And of course, you've got the other overlays of things like cloud provision and so forth. They're not all absolutely still transparent and delivered, so you know exactly how much and what you're going to be spending. I think technologies and supportive players in the market are going to get better at this. And I would be demanding this type of transparency around use cases and so forth from them. I would also say that in terms of the professionalization of data understanding with institutions, I think is growing. You do tend to speak to more and more people who are really trying to understand exactly what quality of data people need. Remember, the quality of the data, the time of the delivery affects the cost of it. And historically, you know, we had a lot of people that said, I just need that data now. Okay, go get it. Well, it's expensive. Let's have a think about this. And again, data, you know, businesses within institutions are becoming quite keen and clear about how they do this. And I think that finally, you know, when you go to look at data providers, for many of the use cases, you're not going to just have a single provider as well. And I think that, you know, it doesn't matter how long or short you've had data from a certain person in the market, there are very, very good viable alternatives to certain data sets. We've mentioned, you know, today we've been looking a lot at how each financial institution is building its own applications. It might be internal, it might be an external client-facing one. These things don't stand still. They're evolving all the time to make sure that they're attractive, to make sure they can get flow. And there's, you know, what we're seeing is people asking for different data. This is where these web APIs are just absolutely perfect. You can switch on, switch off, you can choose what you need, and you choose exactly how quickly that data comes through. These dials, this sensitivity now means that I think cost controls for certain areas should get easier. There's just more options. But it's a very good question. And clearly, we saw costs coming, you know, below quality, but everyone in the end talks about how much it's going to cost. So,
absolutely, I think that it's you can't overemphasize the importance of data quality for all of these use cases. And then in terms of so one final question, I think I will actually posit this one to Hank. So one of the questions is around differentiation of use of market data by asset class. I think that's an interesting one. I'll mention that in the research, it does show expectations around spend by asset class, but I don't know if you want to take that, Hank, in terms of differentiation of use by asset class.
Yeah, I think perhaps Matt can comment on this as well. I think when I'm wearing my more product development hat, what you do want is to, like I said earlier, offer various content sets through a single interface. I remember the days when you were pushed to one service to take on, to take in some corporate actions data, one other service to take in some fixed income reference data, another one for streaming market data in the equity space, for example. So you certainly have to maintain and commingle three different services, potentially three different commercial conditions around these content sets as well. And what should be simple is actually suddenly very complex and convoluted. So in my case, the investors are getting more kind of like clever. I guess there's far more cross-pollination between asset classes, how they relate to one another. And we can see this, right? And Matt mentioned, for example, I think, FX goes hand in hand with the equity data. But if you have equity data, you probably want a basic set of reference data to go with it, some insights into corporate actions events that might influence your security. And so it spreads. And I think what is really important is that the customer and the end user can navigate and commingle that data very, 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 very easily. And that shouldn't be at the expense, again, of the customer to have to do that. I think the technology and the vendor has to enable that to happen, right? It's about making these better investment decisions, so to speak, which is really key in my view. We see, Matt, you probably have more insights into that space, but we see kind of, growth in various asset classes, right? Which demonstrates the fact that you've got more savvy users out there and data gets more democratized in the background.
Well, I mean, the first thing it shows is it's market linked. So last year, we were in a more fixed income yield environment. There was a lot more expected spend in that area. You can see the equity markets, where they are now. You see a lot of people expecting more spend in these kind of areas. And it's quite interesting to me that, even in the core listed markets or in things like FX, people still expect to spend a bit more, which is quite interesting, whether that's because you see more demand for things like tick, or they're going to move from kind of end of day to real time. It's I think it's a bit deeper than just getting more data. There's differences between how fast they want to get it, how the market's working. But go into the report and have a look. You can see that ETF, expectations still high as an asset class. You can see that's driving certainly investment within European markets. Structured products still big asset class in the private banking space. Again, this is enormous. It's so voluminous data because you've got people producing products on a daily basis. So you can see there's still a lot of data being generated and produced. I would say that the answer year on year was somewhat market linked and somewhat linked to the evolution of commercial model for some of things, particularly in the listed market space. For some of the providers there, historically you could have got end of day without charge. Some of you have to charge now, and there's different commercial models appearing. Potentially that's what's moving the needle there.
Absolutely. Well, I think with that, we'll end it here. I think this was a really great conversation. We really went truly across the board, across technology, different use cases, and different data sets. And I want to thank you all, Jenny, Matt, and Hank, for your comments, your thoughts, your feedback. We really enjoyed producing this work with you. And for those who have asked, again, you can receive a copy of this industry research. We can make that available to you. Please stay tuned to your email for further information about how to receive that. And thanks, everyone.
Thank you, David.
Thanks, everybody.
Thank you.
Good to see you. Bye.
See you. Bye-bye.